I've got two dividend growth stocks that were sold off today that could be opportunities, and I want to cover those here today. In Fired Up Wealth, we're generally growth investors. We're focused really on technology and megatrends, secular growth trends in technology. Now, with that said, we always teach diversified portfolios. Having a portfolio that has some dividend stocks, growth spec, even some ETFs, having some cash. So I like to diversify my portfolio into different sectors. And I really like to focus on dividend growth type stocks. We call them DGIF, dividend growth investing for FIRE. That's just focused on total growth. So growth in the dividend as well as the share price. And both of these stocks fit that bill. Now, the first stock, which we've covered on the channel several times, is United Health Group, ticker UNH. It got down to $445.68, the low for today. And you can see it's down almost 12% year to date. And you can see a big range here from 445 to 460. Right now it's trading at 457.51. So it's down about 7%. Now, if you look at the 1-year chart, it's basically flat, and year to date, it's down about 12%. Over the past 5 years, it's up almost 80%, and that does not include the dividend reinvested. And of course, you don't buy stocks based on past performance, but all time, this is up 326,835%. So the 52-week low was today at $445.68. 52-week high is $558.10. Right now, it's trading just under a 21 PE ratio, has a dividend yield of 1.64%. So next, I'm going to cover the other stock that was sold off today that I think could be an opportunity, and then I'm going to share the reasons why the stocks were sold off, and then we're going to look at a chart, and I'll tell you where I think the stocks could go. So the next stock is Humana, ticker is HUM. You can see it's down 11.59% today. That's a big move for a stock like this. This is a $56.78 billion market cap. The low today was 435, so another big swing here, 435 to 460. Trading right now at $453.02. 52-week low was 418.70. 52-week high, 571.30. This is an 18.47 PE ratio, dividend yield 0.78%. And year to date, it's down about 9.4%. Over the past year, it's actually up about 7%. 5-year, it's up about 47.72%, and the max, 5,751%. So the pre-market news on United Health, shares fell 6% in pre-market following comments by United Health Chief Financial Officer John Rex at a conference this week. And he talked about elevated surgery volumes here in the second quarter and how that could impact the business. And you can see these other names that slid along with it. So Cigna was down 3.6%, HUM was down about 7.5%. And again, this is pre-market. So what happened exactly? Managed care companies led by United Health Group and Humana came under pressure on Wednesday as Wall Street reacted to gloomy earnings outlook. So this just happened yesterday, Tuesday's Goldman Sachs Investor Conference. UNH projected the company's medical care cost ratio for Q2 to come under pressure amid post-COVID recovery and outpatient medical care among seniors. The ratio, which indicates the shares of premiums spent on healthcare costs, is expected to reach the upper bound or moderately above the upper bound of its full year outlook of 82.6%. So of course we're talking about insurance premiums here. And as more of these surgeries happen, well, United Health Group is going to have to pay out more money for these procedures. So of course that impacts the financials, but is it a reason for the stock to sell off as hard as it did? Now the nice thing about UNH, it's not just healthcare, it is more diversified. So United Health is really the dominant player when you talk about Medicare Advantage. And many other healthcare names were dragged down by this news. You can see analysts were quick to react, so they started downgrading the stocks. Barclays analysts here increased the firm's forecast for UNH medical loss ratio, the MLR, by 70 basis points to 82.8%. However, the analyst reaffirmed its overweight rating as well as a $565 share target. He projected the company's earnings per share to slip only 25 cents to $24.70. So why was the market reacting so bearishly? The analyst also saw positive in UNH's commentary for companies with large networks of outpatient surgery centers. The results bode favorably for 2Q 2023 hospital EBITDA and will likely contribute to another quarter of tighter managed care. So to me, this could be an opportunity. Let's dig a little bit deeper here in the fundamentals, then we'll look at a couple charts. So UNH right now, the price to sales ratio is a 1.37. Price to cash flow ratio is 18.89. Price to book 5.63. That PEG ratio, we like to see that 1 or less. Oftentimes, high quality companies are not going to be 1 or less. They're going to be sometimes 2 or even higher. This one's a 1.72. And you can see the PE for next year's estimate is 17.5. Now for Humana, the price to sales ratio, 0.67. Price to cash flow ratio, 16.23. Price to book is a 3.86. And that PEG ratio is a 1.53. The PE ratio based on next year's estimate is a 16. So next, let's look at a couple of charts. I'm gonna give some commentary, just what I think about these two companies, why you might own them. Before we do that, I need to announce quick, this video is sponsored by The Motley Fool. If you'd like to see the 10 best stocks to buy now, visit fool.com/firedupwealth. You can also join our private community Patreon Discord. Several members in the Discord community were buying UNH this morning when it was below $450, some even around $455. And you can join us by visiting patreon.com/firedupwealth. If you're new here, subscribe to the channel, click that bell for notifications, and if this is helpful, drop me a like and drop me a comment. I appreciate you. So first, UNH. You can see this stock just early June, just a couple weeks ago, is trading over $500 a share. And in April, it was $530 per share. Now, if you recall, I did a video, top dividend stocks to buy for the month of June. And if you watched that video, there were 7 stock picks, and I offered 10 additional bonus stock picks for Discord members in Elite or higher. And this is from Eric's watch list where I posted those 10 stocks and really the price ranges I'd be looking for. Now you'll notice that UNH, I said DCA $450 to $500, and at that point, it was looking like it was going back above $500. Of course, macro news can always impact technicals, and that's why we dollar cost average. So really, if you're buying this stock, you're not going all in, and you're probably taking advantage of this opportunity when it's 450 or under. And maybe even if it's 455, it still might be a good opportunity when you look at this stock longer term. Now, Humana was also one of those bonus picks, and it was below its Bollinger Band. I said I could go to 465 to 475, and this macro news actually took it lower than that. You'll see on the charts here in a second, both of these just broke all the way down under all their supports. Now, when I posted these bonus picks, I also posted a bit of a warning here in this Discord channel, a reminder to use caution with healthcare related stocks. If you aren't aware, this is part of why these healthcare names have been under some pressure. The main goal of Biden's plan is to create a public option, improve the Affordable Care Act, reduce prescription drug costs, make it simpler for people to access Medicare, and put an end to surprise billing. And that click the link here, more info here. Oftentimes, these end up being long-term opportunities, but it's important what's going on and potential risk. And anytime you get a macro headline, stocks can always go lower than you think they might by looking at a simple chart. So first, let's look at UNH. Now, anytime you see orange, this is chart day. We do this every single Wednesday in Patreon Discord, and you can join us live every single Wednesday. Again, patreon.com/firedupwealth. So last time we talked, we said it was a 22 PE ratio on UNH. Downside prevails as long as 494 is resistance. Could go lower. I still like it below $500 DCA. And DCA target, we said in Discord, 450 to 500. Now, of course, this morning it got down to $445. Right now, it's back up to about $459. So this is why the Discord community can be really important. It can help you get better buys, because this morning we did chart day and I told the community I thought it was a pound the table moment, $450 or less. And you can see in Discord, I posted right after chart day, I said I mentioned this on chart day, but UNH $450 or less DCA is a pound the table buy for long-term investors. That's my opinion. I'm not a financial advisor. Now, these colors here, this is a Fibonacci retracement. Now, these are Fibonacci pivot points. You can see there's support 1, 2, and 3. There's resistance 1, 2, and 3. The S3 is $458. So what it did is it broke past that. It broke down here into the red. This is generally going to be a buying opportunity. And you can see it's closed basically above this S3. So the algos kind of sold it off, and a lot of people panicked and sold, and it just pushed it lower. A lot of times these are great opportunities, especially with high quality names. Now, it doesn't mean that it can't retest and go back here or even go lower. But if you had this on your radar, you're probably buying it at $445 this morning. So the reason you would own something like a UNH, I like it for the diversification, to get into healthcare. If you don't have a lot of healthcare names, pays that nice dividend. You know the company's always going to be around. It's a strong company. It's got a strong balance sheet. And it's been a pretty decent performer. You know, it's not a growth stock. It's an established company. It's really just giving you some balance and diversification in a portfolio. In HUM, you can say pretty much the same thing, right? In a very similar situation, just a huge gap down. It kind of bottomed out here around $433. And now post-market, it's at $455. So this one didn't get all the way back to the S3. And this isn't quite as bullish as that last candle that we looked at. These are daily candles. This is a yearly chart. So this stock was actually forming a base and it looked bullish. If you look at a trend line here, this is trending higher and it was going higher. And I thought there could be some consolidation and it might be a buy if it came down in this range and it went well below that. So in my opinion, I think both of these are opportunities, especially down in these lower levels. This one here below 450, I think it's a great DCA area. It's 455 now, still not terrible, not overpriced. Now with that said, both of these could see continued volatility and they might not recover soon. So these might not just be a quick trade. This is something you're probably going to hold for 3, 4, 5 or more years. And these might not be for everybody, but I wanted to bring them to you. I think they're high quality dividend growth companies. If this was helpful, make sure you drop that like button and drop me a comment. If you're new here, subscribe, click that bell for notifications. Have a great rest of your day. Take care.